evening, everyone. Thank you for joining us this evening on ESG Series Covering E, S, and G. I'm Crystal, the Community Manager at ProsperUs. Let me introduce our speakers for tonight. We have Bertram, Head of Research and ESG with CGS-CIMB Global. Bertram's lifelong interest in investing and love of good writing has motivated his 20 years in research and contributed to his recognition as the best analyst in Asia 2010. He has pioneered several ESG initiatives over the years, culminating in his current role as Head of ESG firm-wide. Next up, we have Tim, ProsperUs Head of Content and Investment Lead with over 10 years of content experience in the financial industry, including stints at Schroders and the Motley Fool. Tim believes that successful long-term investing is within everyone's reach. ProsperUs is a digital investment service launched this March to cater for the millennials. We aim to provide you with the best in-class service and to allow millennials to gain more insights on investing. We have specially curated webinar series. So with ProsperUs, you will not only learn how to invest, but also enjoy curated lifestyle experiences at the same time. Looking to invest on the go? Check out our recently launched ProsperUs app on Google Play and App Store today. Follow us on our social media like Instagram or Telegram to keep yourself updated on the latest news. So without further ado, let's start tonight's session with Bertram. Over to you.
Hi, Crystal. Thank you so much for that introduction. And I got to say, I'm very happy and excited to be here again, talking to people about ESG investing. As Crystal mentioned, I've been looking at ESG as a idea for quite some time, and it's been really exciting to be able to try to push it wider and get it adopted into everything that we're doing here at CGS-CIMB. So I just got a reminder that please, if you do have any questions, do feel free to put it into the Q&A. I think we're also streaming live on Facebook as well. So please put your questions into the chat there, and we'll be happy to take them as we go. So I'm going to run through what I hope is a very quick but informative view of ESG. So I'll have to start with the basics. So basically, what is ESG? And I think we've all heard about it. We've all read it in the newspaper. We all understand at some level what ESG is. What I would like to add to that is that ESG is very much an investing framework, right? So it's something which, yes, it's about doing good. It's about sustainability. So there's a lot of terminology out there. But I think what distinguishes ESG itself is that it's very much an investing framework. So it's a way of looking at investments to make sure that you're looking at it from a holistic viewpoint. So everything is covered, and that what you're investing in is going to be sustainable longer term. Okay, so E obviously stands for environmental. So is what you're investing in going to be impacted by things like climate change, by things like changing regulations, or building new business models? S stands for social. So obviously this goes to our communities, social impacts from the business models that you're investing in. It may sound fluffy, but it's probably been the biggest driver of value creation. And definitely we've seen a lot of impact this year around social, especially coming from China. If you think about Tencent and the issues that it has faced, think about Alibaba, think about Meituan, those delivery platforms. There's a lot of social regulation or social impact that's affecting the value of those companies right now. And then G obviously stands for governance, which is something that we've always looked at from an investing viewpoint. Is the board diverse? Do they make decisions in the interests of minority shareholders? Okay, so ESG is really a holistic way of looking at your investments, so that to make sure that you're investing sustainably. And there's a lot of correlation between ESG and quality, looking at a quality company that has all of these issues already on its management plate. I guess the second thing to note is that even though ESG has been around for a while, in fact, probably around 15 to 20 years, it is evolving as it becomes more sophisticated and a little bit more mature. So ESG, or sustainable investing, used to be about, let's exclude all the bad companies. Okay, so we're not going to invest in arms dealers. We're not going to invest in palm oil or fossil fuels. And that's a very blunt way of measuring how you want to invest. Today, ESG is much more about positive factors. So how can you make sure that your investments are not only going to give you a good return for the long term, but are also going to be part of the new future that is being built right now? Okay. I guess the third point I want to make is that because of the rapidity with which technology is now changing our world, and because of the upheaval from the social side of that and the upheaval on the climate side, we're seeing increasingly this is being demanded by investors. And in fact, things like the COVID pandemic has actually accelerated funds to flow into ESG investments. As funds flow into ESG investments, regulators get involved. And so what we're definitely seeing is our own regulators, MAS, SGX, increasing the amount of ESG regulation on the companies. And therefore, that has an impact back onto the companies that you're investing in. And it's a virtuous circle from there. So the demand by investors is actually causing this phenomenon to happen. And it's really accelerating out here in Asia right now. So the question, I guess, that many of you are asking is, well, why should I look at ESG? If I'm into trading stocks, surely I'm just picking a stock that's going to go up the most. Well, there is a question of the difference between trading and investment. What the evidence is actually showing right now is that if you invest with ESG factors, that you will generate better returns over the long run than if you don't. So there's two elements to that. One is, of course, avoiding mistakes or issues. So knowing that the Chinese government is going to come in with a whole heap of social regulations, which will impact Tencent, will help you avoid being invested in Tencent at the time that those come in. The other way is to also look at companies that are building, I guess, future business models that are going to take advantage of a lot of these long-term themes that are actually occurring. And there is evidence out there. I won't go through it all, but in 2019, we actually wrote a report looking at ASEAN companies, and we identified that there was a 14% outperformance in investing in companies that go from outside the ESG index to inside the ESG index. I think I mentioned earlier that it's really exciting to be in this space right now. In Europe, we're seeing about 55% of all funds invested are invested according to ESG principles. In the US, which is catching up very fast, it's currently at 25%, so that will double over the coming decade or so. In Asia, we're actually around 2% right now. Numbers are hard to come by, but we believe it's around 2%, which means that this phenomenon is really just starting in Asia, and understanding what is happening on ESG and the demand for ESG will definitely help you in the long run ensure that you are benefiting from this phenomenon, not behind the eight ball on this. So, I would step back from all of this hard talk about pure, profits, though, to really, ask people to also think about, why do we invest, right? If you're investing in a company that is destroying the environment or that is not that is creating social issues, you need to ask yourself, what am I actually doing with my money? Am I investing in a company that is actually building a more positive future for ourselves and for our children? So I think there is a big moral question to ask ourselves in terms of why we actually invest. Okay, definitely we want to earn a return, but we want to earn a return in companies that are building a better future for ourselves as well. So definitely that's a question that does come up when you talk to people and they take a step back away from that pure profit motive. I'll talk a bit about the hows, and I'm going to probably refer to a report that was written by our Singapore team. And I'll go through this really quickly because I am aware that I've probably spoken for too long right now. I want to give Tim a chance to share his thoughts as well. But let me jump very quickly. So I'm hoping some of you have seen this report. This is written by our Singapore team, our head of research there, Suki. And I want to highlight a couple of things from this report, which I think are very important, right? So the first one is, if we look in the Singapore context, Singapore is a signatory of the Paris Agreement. So what does that actually mean? The government has actually unveiled a 10-year roadmap, and there are 4 significant targets that the government has actually set. All right, I'll run through those. So number 1, having 80% of new buildings to be super low energy buildings from 2030. 80% improvement in energy efficiency over the 2005 baseline for best-in-class green buildings by 2030. Green 80% of buildings by gross floor area by 2030, and all new car and taxi registrations to be of cleaner energy models from 2030. I think what I'm trying to say with, emphasizing this slide is there are changes that are coming to the way that we live our lives, and they are being forced by government regulation, and that is definitely going to impact us. So we do need to be aware of what is happening. Now, the companies we invest in are either going to benefit from these coming changes or they're going to be hurt. Do you know on your investments which side of the coin that company is going to be on? Again, these are the initiatives that are being undertaken. I'll highlight a couple of these. Just highlighting here in the top right corner, basically with effect from 1st of January 2019, all industrial facilities emitting a certain amount of carbon dioxide or more will be paying a carbon tax on their emissions, right? And about 80% of Singapore's emissions will be covered by this. The initial carbon tax is set at $5 per ton, and it's applied to everybody without exemption. And the rate will be reviewed in 2023. So how is that going to impact the companies that you're invested in? I'll highlight one other one here, which is data center construction. There's a moratorium on data center construction as of 2019. Okay, and Keppel data centers, for example, will explore development of liquefied hydrogen supply infrastructure into Singapore to power Keppel's data centers. Okay. I could go on. Each of these initiatives will definitely have an impact somewhere in the economy and somewhere on the companies, and those companies will definitely be listed, and there will be impacts that we need to understand. So what is being done that is going to help investors try to understand more of this landscape? So these are all the points. Again, just to highlight a couple of them. The MAS is setting out new disclosure standards for Singapore ESG funds from early 2022. So investors will be able to get more information on the fund's investment process, the risks and limitations with the fund's ESG strategies, and if the fund's investment objective has been met. Okay. Another one to highlight would be this phased approach to mandatory climate reporting from FY22. So there's a set of financial disclosures which will be required from all companies that are listed in Singapore from 2022. Right? And these are called the TCFDs. right? And that will again have an impact upon the valuation of the companies that will need to report. Now, often people will look at, does ESG or better ESG ratings correlate with market outperformance? And definitely here, I would agree that the evidence is not there at all. Okay, so here our research team has run through a set of correlations, basically showing that sometimes there's a correlation, sometimes there isn't. But what I would say is, and this is goes back to the finding of our research from 2019, is that ESG ratings are backward looking. Okay, they basically look at published data from the previous financial year. What's much more important is to understand what the company's future ESG performance is likely to be. And if you track companies' future ESG performance, if you're aware of what it is before they get included in the ESG index, then you will enjoy that outperformance on the ESG side. So I'll just run through these names very quickly, and we can go back to them with more detail if there are questions. But from our Singapore research team, our head of strategy has listed the top 3 large cap ESG picks. So these are Keppel Corp, DBS, and CityDev. So if you take a look at these companies, just to highlight, for example, Keppel Corp has got a very straightforward business strategy, which is to pivot it towards more sustainable business by building out its portfolio in renewable energies and exiting from the offshore and marine space. Okay, DBS has a sustainable finance target of 50 billion, up from 17 billion currently. This is by 2024. And CityDev has actually been one of the most progressive firms, and it targets to have net zero emission buildings by 2030 and a green mark certification of 90% for its owned assets by that same benchmark. In terms of mid to large cap picks, Suki has identified ComfortDelGro, Manulife US REIT, and Sembcorp Industries as well. And I'd highlight here Sembcorp Industries, which is definitely going to benefit from the government's plan to raise the renewable energy inputs into the entire economy, because Sembcorp Industries is building the infrastructure which is going to import a lot of the renewable energy into Singapore. Okay, but again, I would highlight more companies that are perhaps flying under the ESG radar that are not currently well rated for ESG, but that have got plans already in place that are going to see the company outperform. And these companies are, for example, Ascot REIT, Balstead Singapore, Q&M Dental, and Yang Zhejiang Shipbuilding. Okay, one final thing that I would add is, in all of our research that we're putting out right now, we include this table, the ESG in a nutshell, and that will highlight, what the company is doing in ESG, what the potential issues are for that company. So I might stop there and let maybe hand over to Tim to speak.
Thanks, Bertram. That was really informative, and a good look at I think the overview about ESG and how we should be approaching it as investors. So I think for my part, I'm just going to talk a bit about, I think, individual ideas from a global perspective, because I think it's probably no surprise that investment trends that you find, I guess, in the US or in Europe, they kind of eventually catch on in Asia, but obviously developed markets in Asia kind of get ahead of the curve. So you're seeing in Singapore, Hong Kong, Japan, these types of ESG initiatives sort of, I think, gain a bit more traction, but obviously it's becoming a bit more prevalent in markets such as the US, just because of the size and how big the market is there. So for myself, I'm just going to quickly kind of go through a few slides so we can leave a bit more time for Q&A at the end. So let me just share my screen quickly. Okay, so I'm just gonna jump through a few stocks first. So this is just a disclaimer. So the usual compliance stuff. This is like not meant to be construed as personal financial advice, et cetera, et cetera. So please do your own due diligence if you are thinking about investing and thinking about ESG investing in particular. So I'm going to just cover like quickly, the E, the S, the G, and understand what's driving each of these factors, right? So I think as Bertram alluded to earlier, this is sort of a framework. So we can view these each individually, but when we do come to investing, we actually have to view it as a whole. So it needs to be viewed holistically, as he said. But I think E has really taken the headlines over the past year, just with renewable energy plays and just, the whole COP26, everything. It's all really captured the zeitgeist of, we need to limit this amount of warming to 1.5 degrees, right? So there are certain numbers that stick in the public's head, in people's heads about, limiting carbon emissions, limiting the temperature rise so that, you don't have global ice caps melting and there being flooding everywhere. So I think for us, or for I think the investment industry, what is exciting about E, I think, is that there is not really going to be another opportunity in our lifetime in recent history that is going to give an opportunity for us to invest as much, into this trend that we could have done previously. So infrastructure, this is an interesting chart, which kind of just shows you the opportunity ahead in terms of green capex, right? So to limit it by 2050 to 1.5 degrees, you're looking at around $120 trillion in green infrastructure that needs to be spent. And it's put into context there with, looking at major infrastructure projects, including, the highway system in the US, Saudi Arabia's oil pipelines, all those types of infrastructure projects. That's going to be small fry when you think about the amount of money that's going to go into global green infrastructure. So it's really going to capture a lot of dollars, and a lot of the institutional dollars are going to flow into that space as well. So E is really something that's driving it. But again, that has to be viewed holistically, right? So S, we have to think about what's driving S. So I think for people who are maybe a bit more tuned into, I guess, what's going on in Europe or the US, a lot of social issues just around equality, around inclusion, for women, for people of color, POCs, for the Black community in the US, there's been a lot of incidences over the past couple of years that have really highlighted the inequality in this society there. And that's obviously led to issues with pay and understanding that everyone, regardless of ethnicity or sex, of whatever, gender or what they identify as, they deserve equal pay, and they deserve equal pay for the jobs that they do. So this is something that I think is being recognized by the corporates in the US, and they're trying to start to address that. And so I think, again, this is a zeitgeist issue that's really come to the fore. People are pushing for change, and in a way, corporations in the US are actually leading this change, because the government, to a certain extent, can't implement as much as they want to. And so corporations are taking action themselves and are actually being proactive, which I think is really, really positive. So with the S, that's something that I think is starting to come to the fore. And finally, the G, I mean, governance has always been something, I think, in Asia that people are focused on, just because there's obviously corruption. There is more corruption in emerging markets. That's just a fact. But there's also things to do with ethics and integrity and risk management. You saw that with Credit Suisse and the Archegos Capital fiasco. That happened to a Swiss bank, and so that risk management there was something that was really lacking. And so this is an interesting survey taken from, it's a few years old, from 2018, but this is a global survey from STI Consulting looking at 130 global institutional investors. And so when you look at ESG as a trend, what you're going to find is that institutional money is really going to drive the change, right? Because it's going to be institutions that are going to say, we're not going to invest in this, or we're looking at this as a key sort of differentiating factor. And so when you think about corporate governance, it's surprising that, I mean, this is a couple of years old, that they still rank corporate governance as one of the most important factors out of ES and G. And obviously at the top of that list, for you can see on the left, is ethics and integrity. corruption and board leadership are the top three, right? So I think these are things that we have to kind of keep in mind when we look at governance as well. It's not all about, fluff, talk about I'm doing great things for the environment and we've got, a carbon neutral plan. You also have to look at the board composition. You have to look at, are they being transparent with, obviously results reporting, share issues, like is there a lot of transparency in how the business is being run? And so corporate governance is still important. So I think it's easy to lose sight of the G when you're looking at environmental and social taking up so much of the airtime, I think, recently. Okay, so I'm going to dive into a couple ideas, and then we can hit up Q&A after that. So I think the first one is I'm going to actually take a look at 3 companies, and none of them are really your obvious ESG stocks. I mean, none of them are renewable energy stocks or any of that kind of thing. I think I wanted to take a look at ESG, as Bertram had described it, as it being a holistic process and understanding that actually all companies are impacted by this, right? So this doesn't mean that an ESG stock is a renewable energy stock. That's completely, I think, the wrong way to look at it. I think when you look at ESG as a framework, as Bertram said, you need to actually apply that framework to every company in the market. And if that company comes out positively from that framework, then I think that's, that technically could be an ESG stock, or that could be a positive ESG stock for you in your portfolio, right? So if you think about Home Depot, this is one of the largest home improvement chains in the world. It has majority of its business in North America, but then it also has, a bit of revenue coming from Europe as well. But one of the key things for Home Depot is that it is huge, right? I mean, it did about $132 billion in sales last year in 2020. And that was up 20% year on year. And so far this year, it's doing unbelievably well. It's continued to do well on the back of a really strong housing market in the US and globally, and people obviously looking for new homes, looking to do better things for their home and refurb and et cetera, et cetera. But what I find for all 3 of these companies that I'm going to talk about is that they've got really concrete goals about what they want to do when it comes to ESG. They actually have goals, and they've laid that out quite clearly. And all 3 of them also publish an annual sustainability or an ESG report. So this is something that I think a lot of companies do. They say that they're going to do this, or they say that they're doing this, et cetera, or they have plans to do whatever. And what you really want to look for is action that backs it up rather than just talk. And so with Home Depot, you're kind of seeing that action come into play. And they have really 3, it's driven by 3 pillars, right? They're focusing on people, they want to operate sustainably, and third, they want to strengthen communities. So I think that's something that we kind of forget about. I guess in number 2 is actually ESG is actually, for me, it equals sustainability. So all 3 of them combined, if the business can be sustainable on each front, that means it's a positive ESG business or a positive ESG stock. And so it has to really operate sustainably. So that's key. So last year, if you think about their goals that they've set in their ESG reports, the Home Depot is actually a massive retailer. So in terms of its supply chain, it needs to really understand in the whole scheme of things throughout its supply chain, what kinds of carbon emissions they're using, where are things sort of, I guess, falling short of their carbon emission goals, and how can they sort of ameliorate that and kind of work on those kinds of areas. So I think these goals and setting these goals, if you look to the right, looking at science-based targets, looking at 100% renewable energy by 2030 for all of its Home Depot outlets, and also looking at renewable alternative energy for a certain amount of megawatts for powering their stores by a certain date. All this, I think, gives you a bit more clarity on how they view their goals and whether they're ambitious, right? And so last year, I think, for example, this is a good tidbit in terms of their pay. They decided that they were going to increase benefits for all their frontline associates and their staff, and that was going to add about $1 billion to their operating costs, annualized. And so initially, a lot of people would say, wow, that's a massive overhead that you're putting onto the balance sheet, or in terms of your costs that you're putting onto the company's liabilities. But if you think about investing in your staff, if you think about taking care of your people, they're giving more maternity leave for their full-time employees. They're giving paternity leave for their full-time employees as well. I think if you're investing in talent, if you're thinking about investing in your workforce, that takes care of like the S, right? You're really focusing on your people and investing in your people and treating them the best way that you possibly can. So investing for your talent, treating them right. I think this is an area that Home Depot is really kind of encapsulated. And that's really been reflected in its share price performance. It's just been an exceptional company in terms of its stock performance, in terms of its business, and in terms of its ethics as well. So I think this is not your traditional stock that you think of as ESG, but it's definitely one of those that a lot of institutional investors are really focused on as thinking this is an ESG friendly stock and one that can continue to perform at this high level. Okay, number two is one you're probably familiar with, Microsoft. And so Microsoft, just because it's tech doesn't mean it doesn't pollute, right? I mean, if you think about the data centers in cloud computing, what Bertram had just talked about, data centers are extremely heavy in terms of carbon emitting. And so Microsoft has really set itself lofty goals, and it's in an industry where, as I said, that there's a lot of carbon emissions, and that's throughout its supply chain. So directly, Microsoft actually doesn't emit that much carbon, obviously with their operations, direct operations, but again, throughout their supply chain, throughout all their suppliers that they have, there are going to be a lot of carbon emissions that they need to control or they need to think about. And so with the big name that you have with Bill Gates, I think that's kind of helped drive the company. There's a bit more of that philanthropic approach to it, but then also their CEO, Satya Nadella, is a really visionary CEO, thinking about bigger picture down the road, 10, 20 years down the road. And so by 2050, Microsoft actually wants to remove all the carbon that it's ever emitted since founding in 1975. So that's a really, really ambitious target for a company the size of Microsoft. And by 2030, they actually want to be carbon negative, which means that they're going to be emitting less carbon they're going to be taking out more carbon than they're actually emitting. So this is a really ambitious goal for a company, as I said, that is Microsoft's size. But again, they've got really clear guidelines for how they focus on their goals, right? They have 4 focus areas: carbon negative, water positive by 2030, zero waste by 2030. And they're also building a planetary computer, which is a really interesting idea where they're taking all the data that they accumulate throughout their different businesses, and they're trying to use that to improve sustainability globally. And they're going to share that on an open source database for any sustainability causes that they're trying to push for. So I think these are all goals that they've really set and they're starting to make progress towards. And they've just released their first annual sustainability report last year. And in each annual report from now on until 2030, they're going to be giving progress on how they're doing on these goals. So this is complemented by 5 strategic pillars, right? You think about the ecosystems, the carbon, the water, the waste, but then this is all at the core is about the employees, right? It's the culture of the company, and are they able to implement these lofty goals? So if we talk about, just like anything, if you talk about a scheme, or if you talk about a program, it's great to talk about that, but implementation of it and delivery and execution is so important, right? And so how is that going to get executed and delivered? And they've got that all set up, right? They have a framework for that. So I think it's important when you look at these companies in the ESG space, or if you're looking at an ESG friendly stock, that they have a framework and they have goals, and that they're making progress towards those goals. And most importantly, that it's measurable, right? There are a lot of goals out there, maybe that they're not going to measure, or they're going to fall out of reports, or they're just going to try and sweep it under the rug. So, but this, you need to really be a bit more active if you are investing into these companies and follow their progress. Okay, and finally, I'm going to talk about Trex. So this is a lesser known company, but it's a really interesting company nonetheless. And this is a bit more focused on the actual product itself, as well as the way that they're going about marketing it and building it. And so what Trex does is actually, it's one of the biggest wood composite alternatives for decking and other outdoor spaces in the world. And so instead of using wood to say, build your deck in the US, or if you're, trying to use wood for decking, it's actually not a very good material, and it's environmentally unfriendly because obviously you're cutting down trees and, forests. And so forests are really one of the best carbon sinks out there. And so what Trex does, it gives consumers the opportunity to buy a really solid composite material, which will last a lot longer than wood. Is actually a lot more flexible, a lot less prone to different weather variations, and it is also making really, really big strides in the way that it manufactures this composite. So they're actually starting to use recycled materials a lot. They're using recycled wood to actually put into their composite alternatives. And so it's more of an international growth story because it's already quite big in the US. It provides a lot of decking to the likes of Home Depot, Lowe's, a lot of the outdoor retailers. But it basically positions itself as wood is their number one competitor, right? So at the moment, the composite market share is only around 22%. That was last year. And so every 1% market share that they can get off wood, effectively, that will equal positive business performance. So what you want to see is less wood, which is positive because you don't want as much wood to be cut down and trees to be cut down. And then, this company is going to be taking market share from wood, and using a really environmentally friendly substitute for wood as well. So this is really positive, I think, both on the environmental side and also on the business side as well. So I think this is something that where the interests are aligned with the business and with the environment, which is perfect. And it's been recognized, right? It's been recognized for its quality and its work. It's received, various rewards there, as you can see with Reader's Choice, 11th consecutive year as the greenest decking company in the US. And it's always kind of out there, I think, thinking about innovating about how it can make its product more environmentally friendly, using reclaimed wood, as I said, 99% water recycled annually to be closed loop recirculation. So these types of stats, I think, really speaks to the innovation and the purpose that this company has, as well as obviously its business goals. And again, it's share price performance based on its business model, based on its environmental outlook, has been phenomenal over the past sort of like 5-6 years. So I think when you do look at ESG, it's becoming increasingly clear that companies that are going to excel in ESG, it's not really just going to be recognized by whoever, by S&P or Refinitiv. It's going to be recognized by shareholders, and it's going to be recognized by the market. And they're going to reward those companies with superior share price performance. And so that is definitely going to tell. And at the end of the day, what you want to do is you want to build wealth for yourself, but you also want to be investing in companies that are doing good for the world. So this is an alignment that's finally starting to take shape. And I think it's a really exciting time to actually be investing in ESG sort of themed stocks. Okay, so I'm just going to stop there and kind of take a look at the upcoming sessions that we've got for ProsperUs. So on the left-hand side, we have a review of Singapore banks and their Q3 earnings and the outlook for 2022. So join us for that next Tuesday, I believe, at the same time, 8 p.m. QR code there, so please do sign up. And then on the right-hand side, we have one in early December on technical analysis, where we'll be having one of our specialists from CGS-CIMB come in and talk about technical analysis and how you can utilize that to, in your portfolio more effectively. So please do sign up for that as well. Okay, I think that is it for me. I think we'll take Q&A. I'm not sure if we have anything going on in Q&A, but I'll hand it back to Crystal for Q&A.
Thanks, Tim. Maybe we can just take a look at the questions that are coming in.
Crystal's frozen.
Okay, so who are the potential winners from these government initiatives? Bertram, you wanna take a look at that first?
Yeah, absolutely. I'd
Question, we are looking at who are the
Okay.
Okay, she's queued up, but let me start. And I think I think, Tim, you've definitely hit on a couple of very interesting stocks and phenomenon there with Home Depot and Trex as well. I think in this part of the world, as mentioned, the government, Singaporean government, we all know, is very progressive. They have a very aggressive agenda usually. They plan for the economy 20, 30, 40 years out, and they put in place initiatives that are going to get Singapore to be, a leader, a business cluster, a hub down the track. So I think, definitely they've taken on this green agenda, and they are moving forward with it. And I think, part of what they want to do is not just ensure that their economy or your economy is not going to be impacted by probably the worst effects of say fossil fuel pricing, etc., down the track, but actually takes advantage of new technologies and actually becomes a leader in those new technologies. So, I'll go back to the presentation that I had, which again is, just let me share that screen again, which I think again is lays out pretty well, at least for the Singapore context, the companies that should benefit. So, companies that I definitely think have caught my eye around this are Sembcorp Industries. So you've seen early on the first slide that I showed, which showed Singapore's green or renewable energy targets. The question is, well, where do you get renewable energy if you're in Singapore? You don't have a lot of space for wind farms or solar. So a lot of the renewables actually going to be generated in countries around Singapore and will be imported in. So how will that importation of energy occur? Somebody's got to build that infrastructure. So whether that's high voltage lines, whether there is some form of storage on batteries. Sembcorp Industries is a company which is definitely looking to, I think, divest its fossil fuel portfolio and invest in infrastructure to import renewable energy. So I think you've got to look at companies like this. Now, that it is fair to say that a lot of the specifics about what they're actually going to do are not yet available publicly. And I think, it's typical of the Singapore system that you would set the target first, and then, government-linked companies would go out and identify the solutions, invest in those solutions, and then bring those initiatives to light. So I think, that is definitely one company. I think CityDev, again, with its very strong net zero carbon building commitment and its capabilities there, in the context of the government wanting to get to net zero or 80% on the green buildings target, is definitely a leader in the area. So definitely these are companies that will benefit. If you look at smaller caps, I'd point to Ascot REIT. Again, it shares the same strategy as its parent, which is CapitaLand, which is rated as an A for its ESG performance. but Ascot REIT doesn't have any ESG rating currently because it's too small. But this is a company, therefore, definitely that probably doesn't have that ESG premium yet built into its valuation. But given that it's following the same strategy as its parent, we can expect that that ESG rating will come, and therefore that premium will actually be reflected in its share price going forward. Sticking in the property space, Baostead, Singapore. So it's got interesting technology which claims that it can actually improve the energy efficiency of building works or engineering works. So again, if you're looking at companies wanting to develop green properties, Baostead Singapore should see a bigger market and bigger demand for its technologies going forward. So within the Singapore context, I think these are the companies that will benefit from government initiatives.
Yeah, I mean, yeah, no, totally. I think there's some really good ideas there from Bertram. I think I would add from my perspective, maybe, I think you mentioned Ascot REIT, right? I think the REIT space is probably one where there's going to be a lot more focus by REITs on disclosure in terms of emissions, just because property is such a big asset class itself. And you're starting to see that already with a bit more disclosure from the likes of Mapletree Industrial, Mapletree Logistics, Commercial. These guys are institutional backed, right, by Mapletree. And so they're really taking the lead on these types of trends. So I think you're going to see there be more disclosures on how they're combating emissions from their properties. And that's also feeding through to REITs like Capital Land, Integrated Commercial Trust, the big REITs that are backed by the big instis in Singapore, or that have big parent companies that are insti backed. Again, they're going to be leading the trend. So you're starting to see more disclosure and more focus on that in the REIT space. So I definitely would watch the REIT space and see what the REITs are up to. Okay, I think we have another question. Okay, so how can investors be assured that companies stay true to their ESG commitments? Okay, I guess I can just quickly cover this from my angle. So that's a good question. I think it's something that we all need to be mindful of and cognizant of, because there is a lot of green, so-called greenwashing out there, which is companies talking a big game and then not actually delivering. So I think, as I alluded to in my presentation, is you really need there to be a framework that is being defined by the company, and there needs to be set goals, and they also need to be held to account by stakeholders. So I think that's something that needs to be watched, and their commitments, they need to really update shareholders, update stakeholders on how they're doing on those key goals. And I think that goes back to companies that are really focused on having a clear vision of what they want to do. Because I think nowadays, if you don't have a clear sustainability or ESG framework, then that's a massive disadvantage for you in public markets' eyes, right? I mean, I think holding people to account is what you kind of, you would expect institutional investors to do that. And you're starting to see that now anyway with these big ETF providers like BlackRock, Vanguard. They're starting to take action on companies that are dirty, and so they're divesting. They're starting to be, even though they're passive in the sense that their funds have trillions of dollars, they're actually taking quite an active approach on the ESG front. So I think from an individual perspective, it's difficult, I think, to maybe feel as though you're affecting change, but you really need to be following what these individual companies are doing and understanding whether the institutional investors behind these companies are holding them to account. So that's key. That's key for me.
Yeah, let me jump in. I guess the greenwashing has been a big issue in the past, and definitely there's been a lot of feel-good sort of sustainability as opposed to actual impactful sustainability. I'm actually a little bit more optimistic, and I would say that there's a lot of data out there now. Now, not a lot of it would be available directly to retail investors, but that information is increasingly available, and I only see that transparency as it's being made enforced by the regulators, by the exchanges, just becoming much more readily available. So as a retail investor now, of course, you've got access to annual reports. The annual reports should have sustainability reports within them, and then you've also got access to, I guess, management questions around the results reporting areas. But one of the things I do want to say, and I don't want to dive into too much detail because I'm probably going to shock everyone if I show you this, which is, let me get out of this. So this is the Refinitiv ESG module, right? So this has got all the data that we have, and this is the most accessible way to access it. So I hope you can all see this. So this is basically shows the ESG score for DBS, ranked on governance, environmental, social. So you can see social being a financial institution, being a bank. Social is the biggest part of what they do, and you can see the various performance shown by different color. Now, if you click into any of these things, you can definitely see across product responsibility, for example, how they perform, right? Do they have a quality management system? Do they have, how do they rate in terms of customer satisfaction? How do they rate in terms of product access, low price, and also in terms of policy, their data privacy policy? And this goes across 130 measures or so. They go to impact their actual performance on ESG. All of these are backed by reported data, so publicly available information. So, like I said, I didn't want to freak you out in terms of saying that there is so much data available, frankly, that an individual can't go away and get all of this information. But I would say that there is enough regulation and enough measurement and auditing going on of ESG information that you can probably be pretty assured that if a company has got publicly stated ESG goals, that they're probably going to follow through on them. Okay. Now, obviously, that's a very simplistic answer, but it does get complicated. Companies like Shell, big fossil fuel companies who've spent decades transforming their business model. They have a renewable cities, initiative, etc. They're still widely attacked by activists, right, for not being as progressive as they could be, or maybe not looking after shareholders because they're delisting from the Dutch exchange to avoid the stronger environmental regulations and just going to a single listing in the UK. I think those controversies will still occur. So it does require you, just like with any investing, is to really understand the company's model, really have trust, develop a level of trust in the management by listening to what they say and seeing what they actually deliver on in the long term. And then I think that's probably the way to approach it, or the way to get more surety in your ESG investing.
Thanks, Bertram. Let's take a look at the next question.
The ETF question. Tim, I might see if you've got any ideas here.
Yeah, so Yeah, there are a couple. iShares does do a couple ETFs. There's a iShares MSCI, I think US ESG ETF, ticker is SUSA, SUSA. The expense ratio is quite low. I think it's like below 0.3%. And obviously, I think that's focused on the US markets more, focused on the big tech and other companies. Surprisingly, I mean, not surprisingly, but I think something we should keep in mind is in a lot of these ETFs or a lot of these ESG focused ETFs, you're going to see a lot of chip companies like NVIDIA or maybe AMD and Texas Instruments. And we kind of forget how, I guess, carbon emitting data centers and tech actually can be. So chip companies are actually going to be really crucial to taking down carbon emissions over the next 10, 15, 20 years, because the more, I guess, power efficient they become, the better the tech is behind these chips that is literally powering everything. So you're seeing, I mean, you've seen NVIDIA's share price year to date and talk of the metaverse and all this other stuff, but behind all that tech is really a lot of carbon and a lot of carbon emissions. So you're going to see a lot of these types of chip companies within these ETFs. So it's just something you should be aware of, I guess, and understanding what's in these ETFs for a start and whether you want to hold them. From my personal perspective, I mean, I see Facebook in some of these ETFs. I don't like Facebook. I think it's actually a negative ESG stock in terms of its social impact. It's negative for teenage development. You've seen all these studies. It's got really bad press. I don't like the management. I don't like how it's managed. So there are going to be personal takes on different companies and whether you want to hold them. And so I think it's important to align yourself with what you believe. But ETFs are a great way to play it. It's just understand what you're buying as well. It's important to be aware of that. But I think SUSE is a good start because it's really focused on the US and it takes in a lot of the big tech ones. And I think Home Depot is in the top 10 in there as well. So yeah, that's one to look out for. Bertram, I don't know if you have anything to add on maybe on the Asia side or anything. I don't know about. Oh, sorry, you're on mute. You're on mute, Bertram.
Okay, sorry. Yeah, you just missed me saying yeah. So what I would say on the ETF space is there are a lot of ETFs obviously out there in the market. I don't know which ones are good or not, which is why I hesitate. But there are definitely a lot of ESG focused ETFs. What I think is interesting on the ETF space is not maybe something which is broad-based ESG ETF, but if you are interested in certain themes like renewables, or you're interested in social impact, or you're interested in hydrogen, right, or uranium, I think ETFs are a very good exposure then to certain themes that you've become interested in and that you believe in over the long term. That's, I guess, the way that I would think about it. I think, broader based ESG ETFs, personally speaking, I just, from an interest perspective, I think that, I would personally be more interested in trying to identify those companies that I think have got great, ESG business models or ESG takes, and then tilting my own portfolio towards that. So a bit more of a tilt type of
active management to it. Yeah. As
opposed to just put everything into an ESG ETF and just let's see if ESG outperforms, because even though the evidence is coming, I still think that, whether you're invested in uranium or whether you're invested in, in wind turbine makers in Korea, that's a very different investing ethos. Yeah,
that's true. And I guess it relates back again to ESG maybe for some investors or for many investors might be personal, or like you don't want to be invested in certain companies. If you want to be in clean energy, as Bertram said, if it's thematic and you want to be in, you believe in clean energy and green energy, then you can definitely play that in a thematic way with a specific ETF. But if you're talking about broad-based, as you said, Bertram, like maybe you don't want to be invested in certain companies, or you want to tilt yourself more to companies that are doing more, holistically, I guess, on the ESG front. So yeah, it's a personal preference as well.
Yeah, and I mean, again, a lot of us would want to invest for the greater moral purpose, for greater good as well. So I think certain types of ESG ETFs, then again, if you look at certain themes, are a way to I guess play that and fulfill that. I mean, you can invest in education ETFs, right, or in nutrition or these type of ETFs. There are a lot out there with these type of mandates.
Yeah. We have another couple questions. Okay. Should I look at ESG stocks being aligned with my values and sacrifice performance? And how well should I balance it? Okay, so I think this, again, maybe goes back to this misconception that if you're investing based on values or on ESG, that means you have to give up investment performance. But I think what we're increasingly recognizing, and what increasingly institutional investors are recognizing, is that actually, if you invest based on values and you invest based on your morals or your own ethics, that actually tends to lead to superior share price performance. So you get the best of both worlds, whereas maybe previously you wouldn't have been able to have achieved that. Now you definitely are starting to see that. So I think it depends on where you see the zeitgeist or the structural the structural trends going, I guess, in the economy. I mean, for me, sort of oil and gas, it's definitely the worst of both worlds. I mean, you're investing in a dirty business, and then you're also seeing that share price performance being really, really poor over the past maybe sort of 5-6 years or even past decade. And similar kind of thing with big tobacco. And so again, I guess maybe I'll loop back to what I think with Facebook. Is that something that is kind of does Facebook have that kind of I guess stigma attached to it that maybe big tobacco has in the digital era, right? I mean, everyone's saying Facebook now is sort of as toxic as big tobacco was in the sort of 80s and 90s. And I kind of maybe do believe that in a sense, because I'm starting to see Facebook versus big tech peers and their share price performance over the past 5 years. They've been really, really subpar against Microsoft, Apple, Amazon, and they've really traded at a multiple discount, valuation wise over the past 5 years as well. So that's something that you really need to keep in mind, is that even if you think this company is going to do great and it's got a massive opportunity in front of it, in the ESG framework, how is it performing, and how is maybe public opinion thinking about it, about where the company's going? And for me, something like a Facebook, that to me has really shown itself to be, it's traded at a discount, as I said, and I think it's been recognized and earmarked rather by the market, and that's been subpar. And so that's something you should keep in mind when you do invest. It's not always, you definitely can make money. And I tend to think with Microsoft, look at Microsoft or look at an Amazon or an Apple versus a Facebook over the past 5 years, and those companies and what they're doing in ESG versus maybe what the social impact is of Facebook. And you see the share price performance, you'll recognize that actually you can win in both worlds.
Yeah. So, okay. So my take on this question is pretty simple. I mean, going back to what I started with, is ESG is an investing framework. Okay, it's not a philanthropy framework, right? The reason why you want to adopt ESG into your investing, apart from the moral reasons to do so, is that it is going to give you better sustainable performance and better sustainable returns. Two impacts. One is you exclude potential risks, right? So it's not that Tencent itself was a good ESG company or a bad ESG company, but by adopting ESG into your investing framework, you can identify there's a lot of noise coming out of the Chinese government over the last 6 months about gaming. It is likely that they may issue regulations on gaming, right? So ESG as an investing framework just makes you look at what the company is doing, not just from a, oh, you can sell this game and make lots of money perspective, but, well, what are the impacts socially and how a government's going to regulate on that? So I do agree with you, Tim. I think there is this underlying belief that, well, if I'm doing something good, it's going to cost me, right? And I think that that's actually a real psychological misapprehension that it doesn't exist, and the evidence is there. I mean, I want to just flash up again. Sorry, I'm showing a lot of research, but I read a lot of research. So this is a research report which just came out yesterday, right? So this is by our research partners in Europe, Librum, right? And they have got a very strong ESG product. And their head of ESG there, Joaquin Clement, just pointed out that there is research which has just been published from the Otto Beisheim School of Management in Germany, which shows that if you take a look, if you look at the valuation of companies, if E, S, or G ratings for that company is 30% higher, then the valuation of that company is 14 to 19% higher than other similar companies. Okay, and in fact, it actually points to something that I've been very interested in for a while, which is that although there's a lot of focus on E, and S is kind of seen as this fluffy, nice to have thing in developed markets, actually they find that the performance of S, right, the S factor, if that improves, that actually has a bigger impact on the valuation of the company than either environmental or governance factors. So, I mean, I would definitely turn around that mindset that, well, I'm going to invest for good and therefore I may pay for it in the longer run in terms of my investment performance. I think ESG is actually a positive factor nowadays to ensure that you have better performance in the long run. And I think that evidence will continue to come to light over the next short while.
Yeah, I think that is like an interesting thread. I mean, common thread between Tencent and Facebook. I mean, they're both phenomenal businesses. They're both great businesses, and they both generate, a ridiculous amount of cash and free cash. They're you can't argue with that. I think they're both amazing as a business, standalone business. But if you think about the social impacts, they're maybe less than desirable, right? I guess from the Chinese government's perspective, and then also, from the American public's perspective. So I think, as Bertram said, you need to look at it as a holistic approach to, this company is not just about maximizing profits and shareholder value. It's about meeting, societal expectations, being positive in that impact. And then if it is positive, or if it's viewed as positive, that should then translate into share price appreciation and performance and outperformance versus the market, and if it doesn't, then, it's likely to get punished probably, or to underperform. So I think that's how I kind of view it from a social perspective.
Yeah, absolutely.
Thanks, Tim and Bertram. I think we have one last question. Let's take a look at the last question. Is there a recommended systematic ESG framework to use as a guideline to evaluate the company?
Okay, I'll take that one too.
Yeah, go on. On the framework side, yeah.
Yeah. Okay, so I would say that there isn't any hard and fast framework right now. It is an area which has expanded very rapidly, right? So this has been going on for 20 years. It's accelerated the last 10, the last 5, the last 3 years. It's just exploded. So as with any boom, what's happened is there are a lot of different standards, a lot of different frameworks, a lot of different ratings available. Okay, and actually the industry now is looking to start to consolidate those into something a little bit more standardized. from an investing viewpoint, as things become standardized, then you kind of lose that alpha or that edge, right? And a lot of the investing profits will start to evaporate as well, right, as things become very standardized. So my answer to the question is there isn't a single framework, but that shouldn't deter you from asking questions and looking at your investments from an ESG angle. Where you will make money is if you can identify a great ESG story that the rest of the market hasn't seen yet, right? So how do you do that? Well, I'd like to say, well, read the research, but even before that, when you have a great investing idea, however that is generated, whether it's a recommendation from somebody or it's technical analysis, this is a great company to invest in. If you're intending to have that company as part of your long-term portfolio, you see it as a multi-bagger over a few decades, then you need to ask yourself, well, what are the environmental impacts of the company's business? What could change over the next 10 years? What are the social impacts of its business? And, how is the company dealing with those social impacts? And, is the company well managed? Is there a single chairman, CEO who's 80 years old? What are the succession issues? So these are again, as far as investing frameworks go, these are the questions that you need to ask. Now, what are the specific questions? Definitely, we could have another webinar and go through a lot of different questions. I think there's a lot of resources out there already talking about E, S, and G factors. I would be happy to provide more details if you need them, but it's in our research. So that's a good starting point, I think, as far as I'm concerned, at least. Our research analysts have taken a look at, the Refinitiv ratings, that have spoken to management, and they understand the industry and the regulations around that. And so all of that knowledge is put into the research. Okay, so that's probably the framework that I would recommend starting with, even though recommending my own research.
Yeah, I think I would just add that, as Bertram said, it's exploded. So I think it's become more of a trend. So there's a lot of these agencies that are out there trying to jockey in terms of being sort of the preeminent ratings agency on ESG, grades, I guess, or ratings, right? You've got like S&P, MSCI, Refinitiv. Like there's a lot of I guess touch points there. So I think it's just good to maybe take those frameworks with a pinch of salt and understand how they position or relate to each other, and then understand if companies are adhering to that, or if they're kind of setting their own goals, or if they're aligning themselves with a specific framework. But I don't think any framework from the rating side maybe should be taken as gospel, because there's still not really any standardization on that side, and it's still very malleable and fluid, I guess, at this moment, just because it's being figured out. So I think when you do look at it from a shareholder or retail individual shareholder perspective, just understand what you think the company should be doing, whether it aligns with your own, I guess, values and what you think they should be doing from a corporate perspective. And then maybe also compare what they're doing compared to peers in maybe their industry or in their sector, to understand how they're competing, or how they're sort of performing on the ESG front versus peers, right? Because if they're in the same sector, they might be dealing with the same either supply chain issues, and they might be dealing with the same social issues or environmental issues. So I think understand that, and just to take a holistic view to it. And I think at this point in time, just try and use as much research as Bertram said, to understand the company and understand the framework behind the ratings. Yeah. Thanks,
Tim and Bertram. And thank you everyone for joining us tonight. For any queries, you may reach out to us via email at hello@prosperus.asia. Before you go, please help to fill in the short survey for us to help you understand better. For us to understand you better, for those on Zoom, the survey will pop up after exiting today's session, And for those who are actually on Facebook, please do scan the QR codes on the slide as shown or in this link for the survey. We hope to see you in our upcoming sessions, and good night.
Thanks everyone. Bye.
Thank you so much, Crystal.
Thanks.
Tim. Thanks,
Crystal.
everyone.
Thank you.